My name's Monica Freeman, and I'm on the Ceres Water Program. And thank you all for taking time out of your busy schedules to be here today. Really grateful for Bloomberg for hosting the event and supporting the report. Also the Park Foundation, but I particularly wanted to thank my water colleagues at Ceres, our team of 5, Brooke Barton, our director, Charlene Lurig, Eliza Roberts, Siobhan Collins, and just really grateful for all your support, and it really was a team effort to produce the findings that we're going to be sharing today. I also wanted to thank many of you in the room, both sort of water research colleagues, and my timer's going off already. That's not a good sign. And I also really want to thank a lot of you as investors who actually opened up and were very candid about your practices, your priorities, your challenges, and also your aspirations for the future. So I really do appreciate, and so this report is really a common effort of all of us. So very grateful for your participation. I also really wanted to thank Chris Davis for coming today on our investor team and the investor team support. They were a critical part of this work as well. So just to get down to the brass tacks of what we were trying to pull off, we at the Water Program were really wanting to do a deep dive on what investors were doing around water and water risk integration in fund management. So we interviewed 35 fund managers and asset owners. 7 were asset owners, the balance were fund managers across the globe. The majority of the participants were in North America, so apologies for all you global folks, but we did really try to take a global perspective and had good participation from Europe, Asia, and also Brazil and Australia. About half of the folks we spoke with were ESG specialists in those firms, and the other half were either portfolio managers, research analysts, CIOs, directors, and so on. All of the organizations were, about one, were UNPRI signatories, so not a statistical cross-section of the investment field by any means. So it was really people that were engaged and interested in ESG integration and water risk integration, with ESG, of course, being environmental, social, and governance policy integration. And in general, we talked about all asset classes, but the discussion tended to focus around equity fund management and also, to some degree, fixed income fund management. But we believe that some of the ideas, even though it can be very equity specific, can be really taken across to other asset classes. And as well, even though the discussion was really looking at water as a case study, we think a lot of the ideas focused on water can translate to other areas of ESG integration. So it is kind of very much a case study in ESG integration. And just to be very clear too, we didn't go out to find out what is going on in the water investing space or the water infrastructure space. It was more looking at mainstream, big global equity funds, fixed income funds, and how they were integrating water. So it wasn't a deep dive on the water investing space. So, okay, we've got that all out of the way. That's important. So the topics was really, again, to look at sort of the current practices, challenges, what resources fund managers are using, what are the actual nuts and bolts of the mechanics, what kind of modeling. We did also a deep dive on shareholder resolutions and the trends in shareholder resolutions over the past 10 years focused on water. We also really looked at how the analysis applied to buy-sell decisions and also beyond. And we put out a set of recommendations on what we think needs to happen in the future to really deepen water risk integration, because that's what Ceres likes to do. So overall, let's get into the results. We really found that most managers found that ESG integration in general really provided a lot of value added to the traditional fundamental analysis. So, traditional fundamental analysis on the left-hand side of this chart, looking at management, strategic positioning, financial and operational elements, and then doing sort of that background macroeconomic and political research. With the ESG analysis, it really layered on the governance factors that were complementary to management, environmental, social factors, with water really touching on a broad cross-section of different ESG factors. And then overall, climate, natural capital, really enriched sort of that macroeconomic and political research. So the quote at the bottom of the page really speaking that ESG integration provides value through the thought process was quite often a theme of the folks that we interviewed. So water, as Dr. Poff far more eloquently mentioned, is complex and has so many elements. And there was a recognition with the group that, it is a complex risk and also opportunity. I really like to say that it's because of the water's so many unique properties and benefits. So not only, it's really required for sustaining all life, it also is a very good natural coolant and moderator of climate, which leads to also economic and corporate benefits of being a great coolant. It is also critical for a lot of biological reactions, but also chemical reactions. It's really a universal solvent. So all these have incredible benefit. It really is sort of a magical molecule, but it also comes with a lot of responsibility, including human rights and social well-being. So when I looked at, how many water questions the interviewees were actually using to capture water risk information, about half were looking at 3 or more water metrics in their processes. And so those tended to focus very much around what is corporate management doing around water risk analysis. But in general, most of the folks I spoke with really wanted to evolve their water risk integration far further and far deeper. And usually the challenges that were brought up, I'm not going to spend too much time on this, but was around data, the need for better data, often a lack of mandate or interest from asset owners, clients. They wanted to see that really being deepened. And also just the fact that there isn't sort of a common investor language around water or enough of a common water risk framework. But those managers that were really starting to go deep and having a long history of water risk analysis tended to really capture 3 different elements. Water dependency, this is really around the corporate lens. So what is the corporate water dependency? And there's elements of, how much of your financial operations are exposed to high water needs, and not only water as an input, but also water as an output, and the ability of water resources to assimilate waste, and also that it's sector specific. Also elements of water security. So you have, let's say, high water needs, but are you in a water secure or water abundant and healthy water resource area, or are you operating in a high water risk location? So the need to capture sort of location specific information, but also that water risk can be physical, regulatory, reputational, social, and you also have to look at impact as well. And then finally, the element of corporate water response. So you may, have all these challenges and be, operating in a high water risk area, but perhaps corporate water risk management is pretty sophisticated and there is good response. So really capturing those elements. So this is sort of an area that a lot of the investors were asking questions around, and they found these 2 other areas to be more of a challenge. Once that water risk analysis took place, we also really looked at how it was applied. So, how is it applied to the buy-sell decision? And a number of different approaches were used to shrinking the investment universe, often by sector, to reduce tracking error. Also, there was about a third of participants had an ESG scoring system, and they really varied in terms of different approaches, how much water was embedded within the ESG score, and how much weight the ESG score had on the buy and sell decision as well. Some, it could really stop a portfolio manager from buying a stock, and others had more discretion. There was also a number of really interesting approaches to modifying financial models and doing scenario analysis around water. There were also sort of quantitative models, so really looking at taking out the subjective elements of analysis and just trying to capture a lot of data. A few managers also really saw water as a good proxy for good governance. They thought water really is a great sort of canary in the coal mine around being an indicator if a company is resilient, if they have good management systems in place, and governance of risks. So they really used water as an insight into that. Oops. There was also managers that really saw water risk management and tried to turn the lens onto also that it is an opportunity. If companies have products or services that are intrinsically suited to a high water risk world. And many, if not most, really used their water risk analysis to inform engagement practices in a lot of different sophisticated engagement practices, and the report goes into those in great detail, including sort of how you track and follow a company over time and benchmark your progress on water risk. And the last approach is also just to provide that water risk analysis, and it would be used at the discretion of the portfolio manager. So just before I wrap up, I just wanted to leave you with a bit more flavor in terms of what were some of those critical elements that fund managers really found useful in doing water risk analysis, and what are some of the resources that they really went to. One was really to use networks of regional experts, and if not the networks, then really to have a news tracking service local on the ground to get especially a heads up about social license to operate risks around water. Another was really, there was a lot of really interesting examples where, as Dr. Poff mentioned, that, to really connect with science, to really seek science. So there were examples of either fund managers having an advisory council with scientific background on it, that they would vet some of their decisions, to actually some fund managers hiring out and subcontracting groundwater specialists to actually help them analyze companies and their ability to grow. So it was interesting to see the model of managers really seeking out science. There were also some managers that used a shadow price around water. So there was a manager doing a deep dive on Brazil and the risks and the practices in Brazil. And they took different sectors that they saw as very high water risk, applied a higher value of water that was actually provided by some government agencies in terms of where water needs to go if companies were to stop polluting. So what kind of price they needed, and they'd actually run that through the models, have a higher market cap, often a lower market cap value based on that shadow price, and then they took that information to the companies, and it was really a good way to engage with management on water risks. There was also a lot of great tools and resources that a lot of managers mentioned in the report, and we provide those in detail. And again, a lot of elements of engagement. And there were also some managers that were really trying to layer on not only that risk analysis, but also looking at trying to prioritize what issues, what companies they really focus on by looking at probability, impact, and where they really had leverage with companies or within that asset class to impact change or to manage risks. And then there were also some really great ideas shared looking beyond the buy-sell decision, looking at sort of how you characterize your portfolios. And there were a small number of fund managers and an asset owner that was doing a portfolio water footprint analysis. So what is their water intensity versus the index, and really helping characterize where they have risk by sector or by company. There was also a lot of a couple managers that were doing sort of a big mega analysis of water risks across all their asset classes and bringing in all the different representatives of the different asset classes to look at that as a sort of a strategic issue for the firm. And there were also a lot of ideas shared in the report around sort of what are the key institutional support structures and policies that are in place, be it guidelines in proxy voting, water elements and proxy voting guidelines that really speak to water. In RFPs, is water becoming integrated, and that helps not only sort of express to the outside world what is required, but really helps align internal support as well. And there was many different approaches to also really showing and providing support internally that ESG and water risk analysis was important across the different research departments. And so those ideas are also shared in the report. And lastly, there was also a lot of really great and interesting ideas around, often it is around risk that we're talking about, but there was many that saw that was really an opportunity, and an opportunity to have good conversations with clients. A lot of clients are becoming more interested in water risks. Different kinds of clients are coming in that want to align their organizational goals with their investment goals, and that these client relationships were really helping them hone their processes, and also produce better reporting, new sort of product ideas, and that was a really fertile ground to help sort of drive product development as well.